This is Shelley Craft coming to you live on SNN Live. We're at the Sprott, Stansberry, Vancouver Natural Resource Symposium 2015. I have with me Mr. Brent Cook, Exploration Insights. He has a newsletter. He's a speaker. He's an author. And he's a raconteur. Ladies and gentlemen, here he is, Brent Cook. How are you?
Great to be here with you again. Thank you.
It's good to see you at Sprott. What's going on here?
This is interesting. The resource market on general has just crashed over the past 4 or 5 years. And you would think it would be a pretty negative crowd, but this is actually a pretty positive crowd. It's interesting. I think, I just finished a panel where we talked about who bought when, and really the company we were talking about, all the institutional funds and that sort of thing came in. They needed to buy that stock at $6. And right now, and they had to sell it, they're having to sell it at $3, and these people here are buying it at $3. It's an intelligent crowd. They've seen the crash before, and they recognize that sometime in the future, this commodities market, metals market, and exploration market does improve. I'm not going to say when, but it will, and we're down 80–90%, so there's not a lot left to go down.
Brent, I was in my office last week. I was tinkering around, writing, reading, and all of a sudden I heard in the back of my mind, I heard CNBC about gold, about the Chinese sell-off, the markets were going to heck in a handbasket, and I'm saying to myself, where's gold now? Then I go online and I see Goldman Sachs telling their investors that gold at 1,042 is the floor, or it's heading there soon. What's your comment on that?
I don't try and predict the gold price. My thesis, I'm a geologist, so an exploration geologist. What I know for sure is that we are not finding enough metal, enough deposits to replace what we're mining. We're mining 90 million ounces a year. We're not finding 90 million in a year. And these mining companies that are producing that, they are going to have to replace that. And it's taking longer to find these things, longer to develop them. So I don't care what, per se, I don't really care what the gold price is. I don't think that's what's key. I think what's key is that as an investor or speculator in this industry, I want to identify and own the guys, the companies that have the projects that are going to actually are profitable or will be profitable, and that these majors are going to buy next year and the year after when they wake up and realize they don't have anything in the pipeline. That's where to be to me.
So you walk around the room where all the exhibitors are, and I walk through there and I look at these guys. It's a little sad, but at the same time, they got to be responsible for feeling good because they're the survivors, aren't they?
They are the survivors. This conference has a lot of the survivors, and it's getting to be a smaller and smaller group, which makes our job easy. I mean, again, another company was on the panel, Mirasol Resources. They've got $20 million in the bank. They've got a joint venture with a major mining company that's going to spend $10 million to see if their property has anything on it. And while that's happening, they're out acquiring more ground. That's just, and you can buy this thing. It used to be a $7 stock. Now it's an 80-cent stock. You tell me which is the better deal.
No, I mean, it's, look, this is an audience that is widespread. The resource industry has been pounded. So I now go and rely on my Wall Street background. And my training was, buy low, sell high, right? I mean, going in, you can't really pick tops and bottoms. I've said that a million times. But I mean, there are telltale signs of some, this has got to be, maybe it goes lower. I'm not predicting price either, but I see from over 1,800 down to 1,000. I mean, that's a pretty sizable drop.
No, I agree. I'm not going to say where the bottom is. I don't know where the bottom is. I suspect we get dragged along through the gravel for a little bit longer. But, if you can find something that's valuable and prove, that this is a valuable asset and buy it for less than it's selling for, at some point you got to make money on that.
So, Brent, for our audience, what do you consider valuable in your subject?
Well, that's a simple and a real complex answer. Basically, I'm looking for a company that owns a deposit or is developing or in the process of discovering a project that is going to be high margin, gold, copper, uranium, whatever it is, but it's going to represent an acquisition target to a major mining company down the road when they're looking to, build on their supply. So valuable is just it comes down to what is the profit margin on that ton of rock, and location is key, and not just in terms of jurisdiction. You got to be in the right jurisdiction, but you've also got to be, is it easy to get to? What's your capital cost going to be?
Right?
Infrastructure,
CapEx.
all that. I mean, the question, it's not an easy business because so many things come into what makes a deposit economic. It's not just rocks, it's metallurgy, it's infrastructure, it's your cost to get in there, your capital cost, your political situation, your environmental situation. I mean, the list is that long. So it's a complicated business, but there's so much money that can be made if you buy the right stock.
Good segue. Let's talk about buying the right stocks. I know your newsletter really focuses on what people should buy. Discuss your newsletter because I think it's a valuable tool to investors looking for insight into what they should buy in the junior market.
Yeah, well, what I try and do, and I built this model, I've seen a lot of newsletters and that, but my model is, I think the most honest opinion you can get from someone is, what are they buying with their money, right? I mean, if I'm buying this stock with my money, right or wrong, I'm there with you. And so that's what my newsletter's about. What am I buying with my money in this sector? And, I've been doing geology and exploration and mining for over 30 years now, and I'm extremely conservative in what I buy. I don't need a bunch of stocks. I just need a few. And I go visit the projects. I can see what the issues are. I can see what the upside is. And over the time, I've done well. I mean, this year, we're just barely down 3% on the portfolio. The index itself is down 28%. So we're beating the index. And within that portfolio, we've got companies that, if it turns, they're going to do great.
You remind me of an old expression we used to use on Wall Street. Like you go down and you visit the projects. We used to say we were going down to visit our money.
Almost the same thing, eh?
So if you had to throw all caution to the wind, I know this is probably you're going to give me that, the sensitivity question and answer. Where do you see the market for juniors in 2016? Will more companies fall by the wayside? Will the survivors start to turn and grow?
I think we're going to see a bifurcation. I think what's going to happen is there's a lot of crap in this industry. There's still a lot of companies that have low quality projects run by people that really don't know what an economic deposit looks like. They're going to continue down, but there's 10, 15, maybe max 20, but probably 10 to 15% of the companies that have the financial and technical competence to do well. I think we're going to start to see them do better. And that's my bet for 2016. So I'm just trying to position myself into those assets, really.
Well, in terms of what you just said, usually those 10 to 15%, that is where the turn in the hockey stick might begin. And then they kind of pull some of the other ones up with them, right?
Yeah, that has typically what would happen. Floats all boats, that sort of thing. I don't invest on that thesis. I don't want to own I don't want to own a crappy boat. I want to own the best. And I don't have to, it's just what I want to buy. So I don't have to own 100 companies. I don't have to talk about 100 companies. It's just, I went and looked at this project. I like the people. They know what they're doing. They've got cash to move this thing forward. And it's got a shot of going for 10 for 1. I'm there.
Let me throw you one last question.
All right.
Politics. We see it, in the U.S., we see it in Canada, we see it around the world. What effect, if any, is it having in the industry today?
It's critical to a large degree. I mean, what's happened is when the commodities all boomed, as the politicians started seeing these companies start to make money off of projects in their countries, they decided, well, we deserve a bigger piece of that. And that's easy to sell to the populace. And so they've come in and upped the taxes, upped the rates, taken over things. And now the opposite's happening, starting to go down. But I think politics is key. And it's not just by country, it's by region. You go to Argentina, for instance, some of the provinces are okay to be in, others are not. Same in the U.S. You know, you don't want to be exploring and developing mine in California, but Utah, Nevada, Arizona, that's okay, depending on where you are even there. So politics is key. I probably, when I evaluate a project, that's probably the third thing I look at. You know, first is the project, second, the people, third, the politics, situation, that thing, and then I start looking at the money. That's how I, you know, in general look at these things. They've all got to be good.
Speaking of good, what's your website?
My website is explorationinsights.com.
Ladies and gentlemen, Brent Cook from Exploration Insights, a speaker, newsletter writer, featured speaker at today's conference. I'm Shelley Kraft. This is SNN Live, and we're coming to you live from the Sprott, Stansberry, Vancouver Natural Resource Symposium 2015. Brent, always great to see you.
Likewise, Shelley. Thank you.